Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the FOMC Minutes. Today, we're going to take a look at the FOMC Minutes and what you can expect. We're also going to bring in some of the latest news, and I have to tell you, the last 24 hours has been absolutely crazy. We've covered the Iran war ad nauseum. I'm tired of talking about it, tired of looking at the markets because there's just so much going on. The technicals right now are of limited value. They really are. The sweeps in the market, the big sell-offs, the rallies. I mean, it's all happening, and right now, believe it or not, we still don't know what's going on. We still don't know what's going on. I'm going to get right out to the news cycle and show you exactly what I mean. But good to see everybody out in the How to Trade community. Tuku, good to see you. Tuku, Andrea Garwal, always a pleasure. This is the latest. Here we go. Live updates. Iran war ceasefire begins, though some new attacks hit the Gulf. Israel says Lebanon's not included, so there was huge, large-scale attacks on Lebanon. And look at this one right here. This one broke just a few minutes ago, about 4 minutes ago. Live updates. Iran claims Israel violating the ceasefire as it appears to maintain control over the Strait of Hormuz. So right now we had a ceasefire. We had a big peace deal yesterday. The market's absolutely, the oil market crashed. Stocks went through the roof. That is going to be in jeopardy, I would say, by the end of today. I don't see any way around it. I think that this is going to be one of those things that it depends on what news you're reading. It depends on what sources you're monitoring. But I can tell you that you can almost guarantee that this ceasefire is going to be challenged if it hasn't already been already. So we've been talking about the deal is on, it's off. It was supposed to be a 14-day ceasefire, brought down the price of oil from a high right around 115 down to about 90 and then got a bounce back up to 95 currently. We're going to look at U.S. oil. Right now, that is what is the straw that stirs the drink is the energy prices. So we're going to look at that. Also, any other markets you'd like to look at in the FOMC minutes. We're also going to take a look at the FOMC minutes, sort of go over what exactly it is, and then talk a little bit about our interest rate expectations. There's a lot going on here, but this is your top story. No question about it. You had a war, you had a ceasefire, and it's not really a ceasefire, it doesn't look like. But this is the headline 4 minutes ago. Iran claims Israel violating ceasefire as it appears to maintain control over the Strait of Hormuz. And that's what this game was all about. It was all about figuring out a way to open the Strait of Hormuz and get the oil flowing. And that is what would take the pressure off of global inflation and also give the markets a little bit of hope. So what's happening in the markets? Well, let's go ahead and take a look out to price action. Jason Maxon, good to see you. Jason, welcome. Tina Jing, always a pleasure, Tina. Thank you for joining me. I think that what we've got from WTI crude oil and UK oil is probably one of the big bearish days in the history of crude oil. There's no question about it. This is a monthly chart. You can see this is my WTI crude oil futures right from that pre-war lows. Those pre-war lows back in December of 2025. It seems like a lifetime ago already. Right down around 54.97, and then we got the big rally up to 117.77. Essentially, that is what happened with your war. Your war doubled crude oil prices. No question about it. And, more than doubled them. And it only took about a month. We could say that, well, maybe there was a little bit of lead up here, a little bit of a rally. That was conventional stuff. We were looking right in those low 60s to mid 60s towards the end of February. That's traditional. Usually we catch some bids going into the spring months, and this year has just been absolute bonkers town. We don't know what's going on from minute to minute, and it all depends on the headlines. So be very careful if you're trading oil. I would even probably recommend to lay off the oil markets for right this minute just because these markets are crazy. They really are. I think they're completely irrational. They're news-driven. A lot of folks have made a lot of money. I've seen them out there on YouTube going, oh, we made a fortune, we made a fortune. And I'd say if you did, you probably got lucky. I'm just kidding. There's no luck involved when you make a lot of money, but there is something called good timing. And the good timing is getting in on the right, really the right side of these markets when they're moving. I mean, the monthly range is so huge already, $91 to $1.17. You're looking right there at what, $9, $27, $26 range. Just talking about 8 days into April. So absolutely huge. We saw a retracement down to 38%, right around 98.31, or excuse me, 93.81. It's easy to get them mixed up right now. That's for sure. 30-minute chart, you can see which level is big, and that level right there, that 38% on the monthly is a big deal. We saw the big sell-off right here when the deal was announced. There was sort of your electronic open for the futures. So this would be the CME's Wednesday session. Got the big sell-off, and now we've just been consolidating right around downside support, which is in the neighborhood of about 94 even. So you're going to want to definitely be careful with WTI crude. I know I'm getting tired of saying it. I want business to get back to normal as well. But boy, when you're in a situation like this, You got to really, really be smart about what you're doing. If you wanted to take a trade, I probably would be looking to buy downside support right there at 93.82-ish, maybe 93.85, somewhere in there. I think that's a pretty good level. 30-minute chart. You see right here's your opening bell. Well, it's not even the opening bell. That's the pre-open. It's when a lot of these things were, these tweets and all this news and everything that's hitting the news wires are just shaking these markets to their core. But right there, there's sort of your opening bell for the NYMEX traditional crude oil pit open. And you're looking right there somewhere right around 7 a.m. my time, about 9 a.m. Eastern. Volume typically picks up, but volume's relatively huge with the news announcements as well. So you maybe could be looking at the U.S. range right now. Spike low right there. Maybe go to that spike high. And you've got a little bit of convergence down in this zone. Maybe a 93.83. Even that, I believe, is high risk. I really do. So be very careful here if you're trading oil. U.S. oil, if you're trading the U.S. oil CFD, you can see how just insane the 30-minute chart is. Just a dramatic sell-off. We blew right through that key long-term level. Nice little bounce. Not going to lie to you, that's a pretty good bounce. Hit it just perfect. We went from a low there of about 97.32. Nice high of about 98.80. That's a great scalp. I mean, that is almost just spot on perfect. Nice strike before we moved lower. And since then, we've sort of been rotating around, and it's sort of in a difficult position for me to get excited about really any trades at all for WTI crude. If you wanted to sort of take a Fibonacci, this would be where the U.S. session started yesterday, somewhere right in there, I believe. I believe it was yesterday somewhere. Yeah, right there, the electronic open. Big sell-off, still very bearish. That is going to be your L formation. So your L formation is a run and then a rotate, and that is extremely bearish. We'll wait and see what happens with the news cycle. If you do see the ceasefire sort of take hold and stay where it should, and maybe the bombs stop and maybe the negotiations work and you got a 2-week ceasefire, then maybe you get the big sell-off in WTI. I mean, they want the market probably right down around 75 if they can get it there. That would be good for the global economy. I don't know that we're getting there anytime soon. So I'm looking at the Dow Jones. The Dow Jones is up about 1,200 points. Everybody's really, they're happy. The VIX is down to 2067, another really huge level. We've been covering these religiously, realistically every day. I've been looking at the VIX pretty much all day, but that's what you have on the daily. So you got incredible rallies there. Of course, if I could figure out how to use TradingView, that would be great. Something like this, though. Nice big rally. There was the sell-off back on the 9th of March. Rotating around. Then we got elevated. Sort of got elevated there towards the end of March. Then we got elevated again. And now we're right back down to the long-term average. So you can't ever tell us that 21's not a big deal in the VIX, because it is. That has been the bottom for this war. Essentially, since the war kicked off, was right in this neighborhood. We've seen the 21 level for the VIX is extremely important. Right now, you're trading just beneath it. Are we out of the woods? Are we still in the woods? Very difficult to say. Very difficult to say. For me, I don't buy this for a minute. I think we're already seeing talks that the ceasefire has been broken. I think the first time somebody does something to a ship in the Strait of Hormuz, you see crude oil probably go higher than it's ever been. And right now, there's a lot of optimism in the market. A lot of people are really happy. I'm one of them. Ceasefires and deals are great things. You want to see if you can avoid the violence and the unnecessary destruction of infrastructure as well. But I'm very skeptical that this is going to hold. Very skeptical. Ralph H., good to see you, Ralph H. Welcome. T. Marina, happy hump day. Happy hump day, T. So today's the FOMC Minutes, and essentially what the FOMC Minutes are all about is Fed expectations. Fed expectations are sort of, I would say, in flux, and it all has to do with the oil and the energy and the inflation. Right now, for the Fed, we have 21 days until the next meeting. I'll have that live for you here, but you're going to be looking at a situation where we are anticipating the interest rates to be held firm right there at 3.5 to 3.75%. That is where the prime rate sits right now. 1.6% started pricing in a rate hike, potentially a rate hike. Let's go to the end of the year meeting and take a look at our expectations, and you can see that we are wagering right now. The markets are pricing in the idea that there's not going to be any rate cuts this year. That's dramatically different. That is dramatically different from where we've been. Let's just go right over here to compare something like this. You can see where were we, just current rates right there, 3.5. 1 day, we thought there was even a higher chance. 1 week, about the same. How about 1 month? 1 month, there was only a 13.5% chance. Right around the time that this war started, there was only a 13.5% chance that we were going to hold interest rates firm. We were betting on rate cuts. If you're interested in the CME FedWatch tool, we made a YouTube video that's probably going to be released in the next several weeks, but do tune into the Switch Markets YouTube channel. I show you exactly how to use the FedWatch tool. We also have the blog entry over on the Switch Markets page that shows you everything you need to know about the CME FedWatch, probabilities, aggregated, historical, you name it, it's all right there. The Fed's dot plot, it is all there for you. So we could talk about monetary policy all day long with regards to this tool. I find it is a really a great device for trying to figure out what in the heck the FOMC is going to do at their next meeting. So, but today we have the FOMC minutes, and we are going to talk about that in just a second. Let me see, T Marina, yeah. Shane, can we check out the massive gap from last night on the DAXY chart? Not the DAXY, but the DXY. Yeah, let's go ahead and take a look at it. It's a great question because the dollar is something that is definitely sliding. Take a look at your dollar index. You can see we sort of rallied here on the monthly, went right up and touched our Bollinger midpoint, and now we're down big. So we're still in bearish territory. This was sort of where we predicted the top end of the range was going to be, somewhere right up around 100, 176, maybe up there at about 101.13. So we're going to look at the gap here in a second, T, but here's the deal. With the dollar index, the U.S. dollar index, the biggest number on your chart needs to be 101.13. It has to be. That's the biggest one on the chart because if that level gives way and you do see the dollar index trade up above that zone, it means that we're seeing extremely hawkish action across the majors. It also means that our T-bill rates are going to be up, interest rates are going to be up, and we're going to start pricing in a rate hike. That essentially is what we're looking at there. So the biggest reason why this range is the most important for the U.S. dollar, maybe in history, maybe aside from COVID, but maybe in history. Right here, Donald Trump is elected. He's elected back here, and you see rates rally, and then you see the 2nd of January sort of sworn in there. Inauguration day was right in there, 2025, and then the dollar just starts falling like a rock. The reason why it started falling, we anticipated the Trump doctrine would be enacted. We saw big-time rate cuts headed really the way of the U.S. economy. We thought that in itself was going to make the dollar much, much weaker in an attempt to boost economic prowess. That is all this was about. This was about boosting economic growth, and it just didn't quite happen. You didn't get the rate cuts that we thought we were going to get, and a lot of that has to do with the Iran war. I mean, when we started January, getting your way back machine, I was going, you are going to see rate cuts, and they're going to happen. They're going to be dramatic. What's happened since then? You've got the DOJ investigating Jay Powell and the FOMC, Jay Powell personally for potentially perjuring himself in front of Congress due to that the overruns, the cost overruns on the Fed headquarters. That's the first thing. The second thing is the war. The war has completely destabilized all inflationary expectations. We believe that you're going to be in a very, very serious situation with inflation here in the next 3 to 4 to 5 to 6 months. So now all of a sudden, instead of rate cuts, we're thinking rate hikes. That's a big deal. That's a big deal. So with the DXY, what you've got here, let's go ahead and just take a look at a gap. And there it is. So it's a great point, T. Great observation. You can see we really were, just in some great areas to sell up here. No question about it. Sort of a daily double top, almost a cup with a handle in a lot of ways, just to excuse my artistry. But that could be seen as a cup. There was your handle, but instead of breaking up, you broke down. So that's a big deal in itself. It's just the failed cup with handle. But now, do we have a true gap? To me, not really. We traded these levels just a few weeks ago, back in March 19th. But still, this is a tremendous void, and we have to respect the long side of this market. So I'm going to break it down for you really, really easy. This is really easy. This is as easy as it gets. If this ceasefire fails and the Strait of Hormuz is closed, the U.S. dollar will fill in that gap. No question about it. It'll fill in that gap. And then you'll also see equities on the big day out of the Dow today. You're going to fill in down to this gap. And then your U.S. oil and your U.K. oil are both going to rise. That'll all happen, and it will happen in short order. I would say within 36 hours of something being announced that the war's back on, you're going to see all of those corrections happen. And I believe personally that everybody in the market that's behind closed doors, the folks that are in the institutions, the Jamie Dimons of the world, the guys that are running these huge hedge funds, the guys that are running the commercial banks, they all know this. They all know this. Now, I'm not saying that it's insider trading. I'm not saying it's a conspiracy, but it is business as usual. Everybody on this planet should know, and everybody in these markets should know, this ceasefire is tentative at best. Anything can happen at any given moment. The United States has built up a tremendous number of military resources in the Middle East. I just don't think it's over, and I don't want to be bah humbug, and I don't like being Scrooge, but we got to be a realist. We've got to be a realist and talk about what exactly is going on here. And what exactly is going on here is it's brinksmanship, it's negotiations, high-level negotiations, but it's also chaos. It's also chaos. How do you negotiate and cut a deal with leadership that gets killed every other day? I don't understand how that happens. I have a lot of questions for the administration here in the United States. They've been caught in a lot of, I'm not going to say lies, but the disinformation is so thick. It is absolutely so thick. There we go. Let me see. Ralph H. Hey, Shane, breaking news. Iran is closing the Strait of Hormuz. Well, I mean, there you go. And unfortunately, we've been doing a lot of this on the fly over the last several streams. It's been very difficult. All right, here you go. Great pull right there. If you guys see any news items like that, just tell me right away, because this stuff is happening so damn fast that it's really tough to stay up on it. Live updates. Iran closes the Strait of Hormuz in response to Israeli attacks on Lebanon per Iranian state media. Iran claims Israel violated ceasefire and appears to maintain control. Iran-U.S.-Israel war. Live updates. Iran closes the Strait of Hormuz again. Iran shuts Strait of Hormuz in retaliation for Israeli strikes on Hezbollah. Iran closes Strait of Hormuz. So there you go. And that is after 2 hours ago. First ships passed Strait of Hormuz since Trump-Iran ceasefire, but traffic remains sparse. Iran closes the Strait of Hormuz. Jesus. So that's where we're at. They've closed it. We're going to be right back to square one here relatively soon. I expect Trump, watch his Truth Social account, keep an eye out on X. I believe that you're probably going to see some big announcement out of Trump, and I think this is going to be a ground invasion. I think they're going to go into Carg Island if that's the case. They've already closed the strait, so they have no intentions of opening it in a deal. I don't know how they're going to make a deal. I really don't. Let's see. Greetings. Good to see you, Marvel. Welcome. I missed yesterday's section, but glad to be here. Yeah, yesterday was sort of a deep one. We talked a lot of war. We talked a lot of ceasefire deadlines and things. It's crazy. Let me see. T. Marina, exactly my same thoughts. I agree completely, T. I think you're going to see those gaps are going to be filled almost immediately, especially if this situation escalates. No question about it. Tina, oh, no. Yeah, I mean, I'm not laughing because it's a very serious situation, but I mean, as soon as something comes out of my mouth, it's reversed, and it's really difficult to read price action or read the markets. I've had experience trading a few things during times of war. I cut my teeth during Arab Spring of 2011. This makes that volatility look like a complete non-starter. It makes it look like kid stuff. And these are huge moves. These are staggering moves. Let me see. Dang, and there you go. Yeah, just like that. So great poll. If you guys see anything else breaking, Truth Social, X, wherever, a lot of disinformation out there, but we'll do our best to stay abreast of it. We've been going about 17 minutes now, and we've already seen a huge news event. I mean, what can you really say about it? All right, let's talk a little bit about the FOMC minutes and exactly what we may be able to be looking at here in about 40 minutes here. It's not going to be a big market driver. I'm just going to say that ahead of time. The FOMC minutes is not a press conference. It is not Jay Powell speaking. What it is it's a brief. It is a written brief on exactly what the committee, the Open Market Committee, talked about at their last engagement, at their last meeting. So this is what it looks like. Now, it's a Federal Reserve Monetary Policy PDF. If you guys want to look at it, you certainly can. I'm going to go ahead and drop that. I'm in the live chat over on YouTube, and I'll also drop it over in our How to Trade community as well. If you want to read this for yourself, just be sure to refresh it, or you're going to have to maybe take a step back and have a chance to read the latest one. This is a good example of the minutes of the Federal Open Market Committee from the January 27th and 28th meeting. Now, think about that. Think about that right there. What had happened yet? No war. There was an investigation into Jay Powell. We were getting ready for Warsh to be the next Fed chief. We were talking rate cuts. We were talking this. We were talking that. We were talking the other. We weren't talking war, and all we talk about now is war. So this is what the minutes look like, though. And I really want to stress this. It takes time. It takes time for people to be able to read this thing and analyze what it says. Now, you could say, Shane, what about AI? What about AI? I mean, AI can analyze this in just a few minutes, and we'll have a chance to understand what it says. Not necessarily. Not necessarily. There's a couple of things that I look for in every one of these FOMC minutes. The first thing is I want to see a division in the room. I want to see exactly what the final vote was, and I want to see what the committee's expectations were for economic prowess, and then also what their expectations were for potential rate cuts. So this is from the January meeting. Remember, you got the new one drops here in about 40 minutes. Let me see. Market, let's see. Forecasts for gross domestic product in 2026 were resilient and marked up their forecasts. That's going to be marked down. While their expectations for the headline personal consumption expenditures and unemployment rate were little changed. So we believed, at least according to the committee at the last meeting in January, that you had a GDP. We're going to mark that up a little bit. And then inflation and unemployment are going to be relatively unchanged. So policy's in a strong position. That's completely changed. That has completely changed. No question about it. And what you're going to see in these next minutes more than likely are higher inflationary expectations, lower GDP expectations, and a lot of it has to do with the oil shock, the oil question, what exactly happens. You're going to want to know that for sure. So market-based measure of policy rate expectations included 1 to 2 25 basis point rate cuts this year in the median model path of the federal funds rate as given in the desk survey, which is the committee, continue to indicate expectations of 2 25 basis point rate cuts this year. I don't know if you guys have ever seen The Hangover, the first one, where there's a line in there where the lady calls Bradley Cooper and says, "Come on, are we getting married today?" And he goes, "That's not going to happen. 225 basis point rate cuts this year, that's not going to happen." With those rate cuts off the board, you're going to see a complete shift in monetary policy with regards to controlling oil fuel inflation. There's no question about it. So even if they bring Kevin Warsh in June and there's still a hot war going on, can you cut interest rates during a war where you have $100 static crude oil? And the answer is no, you can't. No, you can't. So there's big problems with these projections. You might as well crumple them up and throw them all away. They don't necessarily mean anything. And I think that that's going to be a big thing for our U.S. dollar moving forward. You almost have to start looking seriously at a stronger dollar as long as this war lasts. And if you're talking about, big time action in the Strait of Hormuz, look, you can already see it. You can already see the dollar bouncing a little bit. Let's take a look at WTI crude. Crude oil's at about $95 now. The VIX, all of a sudden the VIX is off big today. Is it creeping a little bit higher? Not really just yet. Not really just yet. So U.S. oil, let's just get rid of all these drawings. Let's go right to a 5-minute chart. Give me a 5-minute chart. Okay, so there was sort of your big run earlier today, sort of settled down. We're rotating, and now we're starting to drive a little bit north. If the Strait of Hormuz is closed, be ready for $100 by the end of the day. So to answer your question, HD, will oil go up? If they close down the strait, the deal's off. And so maybe it's just a periodic closure. Maybe it isn't. Very difficult to say. Very, very difficult to say. But right now you see sort of a static level developing right around $95 for WTI crude, and that's huge. So theoretically, a stronger dollar is going to bring bearish pressure to commodities and WTI crude oil. We could definitely say that. But now we're starting to see the big move. We're up about 1% in the last 20 minutes. Now that news is starting to hit the wires. And it looks to me like we're going up from here. Here's a good look at our time price offering charts, our market profile stuff. You can see the point of control from yesterday during the overnights right up there at 96.12. The U.S. session point of control is right down there at 95. So you could probably step up and bet 95s and get away with it and be in a pretty decent situation. So to me, these markets have a potential to reverse. I'm waiting for Trump to say anything. Do we see anything from Trump yet at all? That's for sure. Let me see Kirsty. Good to see you, Kirsty. Welcome. Droopy, Shane, you the man. How can I be the man if you're the man, Droopy? Looking good, Billy Ray. Love it, love it. Did you make any money last night? Looking forward to how you mark your charts. Well, no, not really. I've sort of been on the sidelines. It's been incredible to see these markets move. But it's going to be a challenge to trade these things successfully, no question. Probably one of the biggest outliers out there right this minute is going to be natural gas. Now, most people would believe natural gas should be going absolutely crazy, and it's just not. It's not. It's actually coming off. Does anybody would even venture a guess at why natural gas would be coming off in a time of war? Very difficult to say. I won't even venture a guess. I don't know. I just don't know. But what I do know is 2025's low is coming into play at 26.39, 27.36-ish. Probably going to be a pretty good location potentially to take a long at some juncture. I'd try to shade this just a little bit, maybe right up in here, maybe looking to bet, somewhere right around 27 evens maybe. Not necessarily a bad area, maybe 26.50. But this zone, fascinating stuff. And since the beginning of this war, we have seen bearish price action. We had the big rally where we went up to about 3.5, and since then it's just been trickled down. So the world's not worried about LNG. They're not worried about Qatar. They're not worried about the Persian Gulf as it pertains to the natural gas market. And that blows me away. That's very surprising. But I'm definitely looking at 2025's low. Should be in the vicinity of 26.39. You can see just on our daily chart exactly where this trough was, and it occurred last August. As we go into the spring months, there shouldn't be really any question that we're expecting bearish price action from natural gas. But boy, with a potential supply shock out of the Persian Gulf, it's not impacting gas at all. It's not impacting natural gas at all. So I'm sort of fascinated by what's happening here. I think that gas is going to be an interesting play, but I wouldn't be looking to execute a trade until we get down to right just above 2025's low. Bitcoin. Got a lot of questions during the overnight about Bitcoin. Shane, is Bitcoin going to break out? Is it going to break out? I'd say, well, I don't really know. I don't rightly know. What I will say is that it's been an absolute rotation for seemingly the longest time, and it's one of those markets that I really want to point out. The long-term technicals are critical that you really understand this. This is Bitcoin, yearly chart on Bitcoin. I know it's a yearly chart, but just bear with me. Spike low down there right back on January 2022 at about 15,479. And then you got the all-time highs up above 125. Well, we sold off beneath last year's low, had a significant crash, I would say, down to about 58, which was about half of your price. A little more than half of your price. Tremendous sell-off to open the year. It hasn't been fun for Bitcoin bulls. So a lot of folks believe that millionaires are made, billionaires and millionaires are made in bear markets, meaning when the market is crashing, that's when you want to buy into it. And you're not wrong. You're always looking for good deals on things. You make money, when you buy something, not when you sell it. And well, of course, you could make money selling in these markets too, but as far as an asset goes, an investment, if you're looking to make some money on a piece of property, you've got to get a good price. You've got to get a good price. And Bitcoin, that's what people are looking at it. They're saying, listen, this is property. This is an investment for me. Where's the best price? Do we want to buy 70s? Well, we're back up above this key level, which is the long-term 50% retracement, right around 70,000, 575. So if you wanted to buy, you certainly could. This optimism. This was about almost a 5% pop, a 4.5% pop yesterday. A lot of that was because it looks like the Gulf was going to be reopened. Now what? That's exactly when this stuff started developing, when we got the big announcements, we got the big bullish run out of Bitcoin. Why? Well, what about chip conductors? What about helium? The resumption of helium was going to be coming out of the Persian Gulf. We were looking for the semiconductors to be active. The AI boom was to continue. And now that's in question. As soon as the Strait of Hormuz is shut down in any capacity, it's not just oil that goes through there. I talk about oil a lot because it's my specialty, but the helium, the fertilizer, it's planting season. You're looking to start getting your corn crops into the ground. You need that liquid fertilizer, the stuff that just makes your yields go through the roof and actually lets the farmers produce at a legitimate level to where it's even worth them showing up. It's craziness right now. So you got fertilizer. So something like 30% of the world's fertilizer isn't coming out of there. It's affecting everything in the world. So you got a nice big run. You've got a pullback, a secondary run here on the 30-minute. This zone right in here, I think maybe a late day bid from down there right around 70,500. Something like that could be very good. But if you don't get it, then you have to be prepared to walk. And right now I'm watching the top lines of these stocks closely because they're still incredibly bullish. But the game's changing. The game's already changing for WTI crude. U.S. oil just taking off right now. Bitcoin, if you do see these markets reverse, you got to think Bitcoin's going to come off back down into the 60 zone where we seemingly be trading forever down in here. So I still love to buy 58s. I think that if a person has waited this long, it probably wouldn't kill you to wait a little bit longer to buy 58s. But this monthly chart shows you just how tight things have been. Right there, February, March, incredibly tight. So far, April, incredibly tight. Do we get a breakout? I don't know. I think we're going to trade right around that 70,000 level for a while. I'm not sure Bitcoin's going anywhere anytime soon. Euro USD, let's go ahead and take a look at the Euro USD. You can see the daily chart has really rallied. I mean, it's about 0.67% as the US dollar has given back some puff, but now it's starting to take it back. And the sentiment's starting to shift right now. You can see it. I can see it happening in real time. So what can we really do? What can we say about what we need to do with the dollar? Fall back on your technicals. Watch your risk. Don't be crazy about getting in there and trying to make a fortune. Spike low to a spike high. Pullback zone 116.38, somewhere right in there. I'd probably say that would be a nice scalp. We're trading 116.75s right now. I think that would be a great area potentially to step up and bid just in case we do get a bit more of a pullback. I think we're going to get it. I think you're going to see the dollar start to flex here, especially after Trump says something. He's got to say something soon about this straight closure. That'll be the big one. As far as what do we need to be doing and thinking for the next 30 minutes or so while the FOMC Minutes comes out, well, we'll take a look at the mainstream news outlets and see if I can find a headline for you. But right now, it really is all about the war. The FOMC Minutes, it's not going to shake the markets up. It's just not. It's a secondary thought right now. We have a pretty good idea that rates are going to stay higher because of this oil shock. And that's what's driving the dollar. So to see it weak on that peace announcement or ceasefire, it's going to take back those gains or those losses. You're going to see it right back up around 100, probably 99 here relatively soon. Really starting to pair those losses. Crazy how fast these things are moving, guys. But definitely a nice level there for the Euro USD. Here's a silver market. I wanted to pull up the daily 920 EMA crossover. This is a trade that I'm watching relatively closely. Now, the 9 EMA, when it crosses over the 20 EMA, we're looking to buy. This is our coded version. You'll get a nice gold bar there if you do already have the code hooked up to your charts. Something like this, though, this crossover could be a big deal. It could be a big deal because we have just seemingly traded 75 forever, especially during this war. We had a nice big rally, people piling into safe havens, and then they came off big and then sold off. Then we came right up there to 75, and now we're rotating sideways at 75. I think if you do get that bullish crossover, the red one, the 9 EMA crossing over the 20, it's probably a bid for silver. Gold, real similar situation. The beautiful thing about gold, though, and why I would start to get a little bit pumped up about this is 5,000. 5,000 is a key level for gold. We traded it for seemingly ever, and now we sort of broke to the downside, saw the big sell-off as traders started to choose those 10-year notes, those T-bonds with the yields. They wanted to get into those as opposed to getting into gold. Well, now you're starting to see a crossover develop here where we've got some tight ranges, 47.50s in play. We're above 45. If you do get this crossover where this red crosses the blue, could be a pretty good entry just to take the pop to 5,000. The biggest thing that's emerged over the past several days, number one, we can't ignore the inverse relationship between gold and stocks. Crude oil and stocks. Oil goes down, stocks go up. That's obvious. What about gold? The correlation with the dollar just jumps off the charts at you. Dollar down, gold up. Dollar down, gold up. That means that some of those yields that we talked a lot about, the 10 years, that 10-year note, we'll pull a yield chart here in a second. But definitely, as you see those yields slide and as you see maybe the U.S. dollar give back some of its puff, you're going to see gold rally. Interesting. It's interesting because it hasn't been like that. I mean, it's been completely detached from reality. It really has been. Gold has sort of had a mind of its own, wandering around aimlessly. Nice big sell-off when the dollar got sort of stronger. The dollar sort of held its ground, and now gold's making a comeback. Big sort of a bearish day here for the USD across the board, and gold got a bit of a pop. So I think that if you got a 9 EMA to cross the 20, this could be a fantastic area and a really nice crossover to play back towards 5,000. As far as the US 30 goes, US 30, great level here. This is a long-term zone, or excuse me, a long-term Fibonacci wave. You see spike low, the tariff panic in 2025, right there to your all-time highs in February this year, and then you just blew the bottom out of that thing in March with the war news, and now you've sort of tested, bounced off of your 13-month EMA right around 46. Now we're up big, 47, 762. I'm still skeptical. I'm skeptical the ceasefire is going to hold. I'm skeptical that I'm skeptical the market's close positive this week. 38% though down there, right around 45, 1.25. I would be very interested, especially if these markets reverse. I think that's a great zone down there as a potential bid there for the US 30, the Dow 30. That's pretty good stuff, pretty good zone. All right, way behind on the questions. Let me see. 1906 MIS. Good to see you. 1906. Shane, I had two positions in the NZD. I had the Kiwi dollar and the pound Kiwi. Was it specifically what was it specifically on yesterday that strengthened the Kiwi? Was it the ceasefire or was it the rates being held? Thanks, man. It was a ceasefire. It was a ceasefire in 1906. Remember the rates being held. You could say that was big. You could say that anytime monetary policy enters into the equation. Yeah, but it was the ceasefire. The dollar slumped right away. Let's go ahead and take a look. You can see this Kiwi gets a big rebound this month, starting to gain a little bit of puff, looking like a safe haven. Daily chart right there. There it is. Why against the dollar? Well, we saw the dollar really lose some ground yesterday because of the ceasefire. Immediately, the idea behind the ceasefire, relatively simple. Ceasefire, oil prices go down. That means that potential inflation shock that would have driven the dollar higher, maybe for rate hikes and tightening policy to restore pricing stability in the States. The odds of that sort of decreased as the oil prices went down. So the idea was, okay, we got a ceasefire. The oil's flowing again. Now we're going to maybe avoid some of that inflation, that hot inflation from crude oil. Well, essentially, that drove the dollar lower and drove this Kiwi dollar higher. As far as the Great Britain pound goes, could we say that the NZD, Great Britain pound, could we see the same thing holds true? Or maybe Great Britain pound NZD. I don't know. I'm not overly familiar with this pair. Okay, so if you're looking at this on a daily, you'd say, okay, what happened? Well, the Kiwi gains big, right? Of course. Why would the Great Britain pound react like this? It's not the dollar. Well, Brent crude. Take a look at what happened to UK oil. Brent crude, North Sea Brent. They get it right up off the upper coast of Scotland. UK oil's off about 8% today. So that would be sort of the same basic idea that we outlined for that US dollar that we saw in the Great Britain pound as well. Fascinating stuff, though. I mean, incredible price action. Look at that. I mean, just a huge day, 0.73%. Let's go back to that Kiwi, though. Let's take a look. Dollar falls, U.S.-Iran ceasefire emboldens investors. Yeah, I mean, that essentially is what it is. FOMC Minutes is going to drop here in a little bit. I wouldn't worry too much about it. What would you want to do here? Would you want to buy it or sell it? I think we could build a case maybe to buy a pullback on a daily pullback, spike low to a spike high, 57.91. Pretty good area we may be able to attack and sink our teeth into. 4-hour chart, something like this. That's pretty good stuff. We have 38% levels sort of converging right there. We've got some good convergence on multi-time frames. Those are our daily levels. There's our 38% levels. So we're right there, right around 58 even, giving us an opportunity potentially to bid this thing. So I would be looking to bid. However, the things are changing. Be ready for the next big news event. That's really all you can say about it. So good point. Kiwi dollar and pound Kiwi. Yeah, that was the ceasefire in 1906. Let me see. Coco Bro, good to see you. Coco, is the USD going to pull back? I think so. I think it all has to do with your news, though. The news cycle. Let's see what's going on in the news. White House press secretary holds a briefing with reporters. Good Lord. I mean, anything can happen there. Typically, her press conferences don't move the markets. First ships pass Strait of Hormuz, but traffic remains low. Ceasefire. Trump threatens 50% tariffs on any country supplying military weapons to Iran. I mean, it's just what exactly is happening right this minute. I mean, this is old. This is an old story. They have live updates. It's old. I don't think that we're there. I really don't think that we're there. Be careful. I've been saying that for weeks now, but be careful. That's for sure. So is the USD going to pull back? Yeah. I mean, it was a good point that T. Marina made earlier. Here's your gap, and look at you're already starting to see this dollar index really look to fill in this void. I mean, I could see this being targeted all the way up to 99.5. I would be looking for at least 99.25 on a bounce, maybe even later today. You're already starting to see it. It's going to take a little bit of time, but as oil rises, right now there's a strong positive correlation between oil and the dollar. And if you do see that pop in oil, I think we're going off the board up around 100 maybe later today by the electronic close. Depends on the news, but the bidders are there. And that's the important thing when we're talking about WTI oil. There you go. Let me see. Shubham. Hello. Sorry to disturb you, but I just wanted to ask, do you need a good thumbnail designer or video editor? I think we're in pretty good shape. But thank you for asking. I sure appreciate it. Thank you for asking. Time to sell gold, Dimas? Is it time to sell gold? I'm looking at the other side of the gold market. I really am. I think that this crossover, if it does develop on the daily, could be absolutely fantastic. Let's go to a 4-hour. And see, now we're getting conflicting signals, right? I would say if you were serious about selling gold, 4-hour chart, 9 EMA crosses under the 20, that may be a very good sell. Because if this does happen, if you get this crossover on the 4-hour where the 9 crosses under the 20, you're not going to get the crossover on the daily. So you could easily adjust your strategy according to this. And the 4-hour chart is pretty good playing this strategy. The 920 EMA crossover right there was your buy signal back right around 4,500. Been a pretty good trade. And then over here, I mean, this was just magic. You caught the big sell, the big move right there going back to the 12th of March. And it was just a tremendous position. So is it time to sell? I don't think it's time to sell just yet, but this is as good an indicator as any to be looking potentially to short this market. This 920 EMA crossover, given this much volatility in the market, you'll notice that the crossovers and the cross unders are not frequent. That means that the throttle's wide open and there's a lot of action in there. So I would definitely say that this one, 4-hour chart, watch the 920. If you do get the 9 to cross under the 20, that's probably going to be your short. And it could happen. Right now, you're giving back big gains. You're only up about 0.68%. So there's a lot happening. Now, if you're trading gold futures, a little bit different here. If you're looking at gold futures, we could pull up our time price offering chart. Let's take this down to a 30-minute schedule. Okay, this is good stuff right here. Point of control. Point of control is right up there, right around 48.25. We have broken beneath the point of control. We're also beneath that lower value area. That suggests that we're breaking out. We're breaking out to the bear. I wouldn't want to sell from here just yet. But if you are going to get potentially a sell on this 4-hour chart, that would be the safest way to do it. So no, to answer your questions, it's not time to sell. Let me see. Get marked. When's the FOMC? Yeah, the FOMC minutes are coming out in about 17 minutes. So, I'm sort of looking for headlines on the FOMC minutes, what to expect. Not really seeing anything because nobody's thinking about it today. Everything, all systems go from right around Iran, the Iran situation. So what do we got here? We already covered a lot of this stuff. So if you're late, no worries. But this is what I was covering earlier today. Reuters, Fed minutes of March meeting could flesh out how policymakers view war risks. You're going to see the inflation outlook rise right there. There's your summary, right? Fed officials raised 2026 inflation outlook due to oil shock. Minutes may reveal a debate over risk to inflation versus growth in jobs. Fed holds on for now, citing uncertainty over the impact of the conflict. So I don't think it's going to be much of a I don't think it's going to be a big one. I really don't. I think you're going to see these guys get in there and talk about it. And they're going to say, yeah, we're going to have some inflation. We're probably going to have to revise down what we think of our growth projections. But, big picture, does it move the markets? No more than these Iran war headlines are. All right, we had a weekly level here on the dollar yen that just didn't do really anything. Didn't really do anything. It wasn't the best because we saw such incredible action out of the U.S. dollar. The yen actually gained quite a bit in the last several hours. But in any case, you can see right there, spike low, dollar yen, spike low right up there. You're pretty good zone, pretty good support zone, 157.31. And you've got that EMA, that 13-week EMA is right down there at 157.36. So that area right between 157.50 and 157.25 is a big deal for the dollar yen. Maybe we get it. If the dollar continues to slide a little bit today, maybe we get it. Maybe we get an opportunity potentially to get the job done. And just as soon as we saw U.S. oil up at $96, it's back down to 95. And this is just crazy stuff, absolute crazy stuff. No doubt about it. No doubt about it. Let's go back over to our U.S. oil futures here. There it is. Point of control right there. U.S. session point of control, the POC right at 95. We're testing that area right now. Is it worth taking the trade? We could buy it, buy market, just take a shot at it. Is it a high percentage trade given this much volatility? It's tough not to get a rotation back in our favor, 10 points. I can tell you that. 70, 80, 90, something like that. You could easily get a bump, but you could see, it's just so convoluted right now. I haven't seen anything like this in a long time. But right there was your test. You went down to 95, 90, 94, 94. You bounced back up to your high right there, 95.16. Really a high probability scalp. The question is where do we go from here on this type of trading day? We can go anywhere. We can go anywhere we want. Do you want to take the trade again? You could order, you could buy market. You probably could hit it again. Sort of rotational right around 95. The only big problem is if it breaks 95, you got to get out of there because the market could easily blow against you 100 ticks, 200 ticks, and it can happen fast. It's all dependent on the news. That point of control is pretty stubborn, though. It really is pretty stubborn. So if I was on the trading dome, something like this, I would be wanting to get my my TP right up in here, more than likely, maybe 10. Take a nice 10 ticks off this market. It's certainly possible to do. We saw it go in our favor, and now we're rotating down towards 95, 94, 99, 95.02. Now we broke. Now you're down there at 94, 93-ish. You need to start thinking about getting out potentially. However, the market is sort of in rotation. It just doesn't seem to want to go anywhere. Could you get paid? Look at how big this volatility is. This is crazy. The market is all over the place. It's a high probability trade to get 10 ticks from that 95.01 area. Have we got it yet? No. We could move our profit target up and maybe look for 95.16, 95.25. That would be worth probably a cool $250. Right there, we're just at 95.07, 06. This is really lethargic price action for how big these ranges are. It's not like there's a tremendous amount of momentum anywhere. It's like you're sort of waiting for this thing to rotate higher, just based on that point of control holding up. Strong trade, high probability trade that we get the 10 points, but you're seeing that rotation really develop at 95 even, and that's something you got to watch. Now we're starting to break a little bit. Where are we trading? 94, 95, 94, 94, 92, right back up to 95. You got to have sort of deep pockets to trade this type of environment. You can't just bail once you print at 95, 94, 99. You got to wait for this thing to prove itself. 95.07, 95.09. Are we finally going to get paid off at 95.10? Should we move our profit target up a little bit? Maybe we could do something like this, move it up to 16, maybe let it sit there for a minute. That'd be a good trade. Be worth about $150 on one lot. You can't beat that kind of payday. It's pretty good work if you can get it, right? Now let's wait and see what happens here. We're at 95.06, 95.07. Really just a challenging market environment, though. You can't – that's the thing about markets that are this big, that have this much what we call breadth. When the ranges are this big and everybody's involved, you can't really just get out once price goes against you a tick. You kind of got to have a little bit of patience with it. But the problem is that in markets like this, having patience costs money. Having patience costs money. So what do you have? You've got the FOMC minutes dropping here in a minute. We had WTI crude oil inventories out a little bit earlier today. I would love to see this spin up there and pay us off at that 15 level or 16 level. Maybe it will, maybe it won't. Just a challenge. The market doesn't have any conviction right now. It feels like nobody knows what's going on. So there's our jump right up to 15, 16. We probably should have just taken the money there. Now you're at 95.10. You guys can start to see how difficult scalping like this can be, even though that's got a very high probability of winning. What do you really say? When do you get out? How long do you stay in? How long do you get out? To me, I don't feel great about the trade because I don't really know where to get out. If it breaks beneath 95, I mean, it's done it twice since we've been talking about this trade. Do I stay in or do I go? It's tough. It's a challenge. It's a challenging trade. Right back up to 10. Do we take the $100? It's wild. It's just wild stuff. I don't really know what to say about it. Let's see. We had some other questions here. No rate cuts. He is tightening. Cena, yeah, no rate cuts. He is tightening. Geopolitical inflation, and they need leverage for war. I think that's probably correct. That's probably correct. You're not going to see any rate cuts, not until at least the fall. Not until at least the fall. Let me see. 512 Eli. The taco deal is postponed for 2 weeks. That's what they say, but I'm looking for the business to really develop here at any minute. I mean, I'm waiting for a headline at any minute. NQ is ripping due to the press secretary speaking right now. Daniel, or do you just take the day off? I think you take the day off. Unless you want to do stuff like this. If you want to look to scalp, get your market profile out and look to take, small points. You can make a living doing it. You just got to want to do it, and you got to be patient. You can't just dive in to these trades without good trade location. You got to wait. This was pretty good trade location. We've had several chances to take the money and run. The market may, in fact, blow up in our face and trend south. Really difficult to say. Really difficult to say. But you're looking at 95 even. Really lazy trading. Kind of boring, to be honest with you. See, look, there you broke down to 95 again, 94, 95. When do you get out? You kind of just got to let it roll. See what happens. This is an interesting level down here, though, towards the bottom of value at 93.81. See, clearly you can't hold it that long unless you're going with extremely low leverage. It might be better to sell 95s right now. But we've had our chance to make money there. So remember, if you want to trade any of these ideas, head on over to switchmarkets.com. Thousands of global markets you can trade. They've got CFDs on futures. They've got pretty much everything that you need to trade successfully. Tight spreads, bonuses. I believe there's a 5,000 bonus going on. Let's see. See if we get paid off right here. They got a 5,000 bonus. You can start with as little as 50, and I believe they're matching 50 and 50 as well. So a lot going on over at Switch if you're interested in becoming a trader. They're not a bad place to begin. All right, everybody. Sort of let this thing play out long enough, getting a little bit bored watching it tick back and forth. No real headlines coming out just now. Levitt is talking. There is the press secretary talking, so that could theoretically drive some participation if, in fact, she's going to get in there and tell us something we don't know. As far as this oil market goes, it's God, just don't get caught on the wrong side of it. If you get caught on the wrong side of it, it could be a real challenge. I mean, it wants to trade up to 16 and 25. You can see the market's just rotating and bouncing around 95. What have we hit it 15 times already? All right. Do we finally get filled up right here and hit our target? Nope, 15. We're printing 15. We can't get 16s. Back down to 95. Oh, that's crude oil trading at its finest right there. Tough not to take the money, though, when you're plus 15 ticks like that. A cool $150 on one contract. That'd be pretty good. All right, everybody. Keep an eye on the minutes. I'm not looking for the minutes to do much of anything. I'm watching the energy markets closely. The Strait of Hormuz, if it's closed, I expect another ultimatum out of Trump anytime, and probably aftermarket today would be when it happens. He's not real big on talking when the markets are going, and I think they've got a big bullish day right now. They've got negative crude oil. I don't expect any saber rattling until the U.S. overnight after that market closed at about 4 p.m. Eastern. So that's one of those things that I would definitely Definitely be watching. Definitely be watching. And if Trump's a loose cannon, hey, we got paid. All right. See, we hit our target. We knew it all along. Trump's a loose cannon right now. He can say anything at any given time. I do not expect him to say a friggin' word with the markets up 1,200 points today, though. NASDAQ's everywhere. S&P 500's up. Dow Jones is up. Oil's sort of down. The dollar's down. I mean, this is a good day for the Trump administration. I don't expect him to say anything to wreck it. No question. All right, but stay tuned for the FOMC minutes. Remember, you're going to have to wait a few minutes for the headlines to come out. Not really anybody knows what's developing here with regards to what the Fed is thinking. Remember, they're still under investigation by the DOJ. A lot of folks believe that tightening's the way. I'm sort of coming over to that camp. However, if they do end this war and you get the new guy in, the new DOJ or the new Fed chair in there, they could cut it aggressively. All right, everybody, I'm going to go ahead and just take off here for a while. We'll be back tomorrow with the Forex Watch, U.S. dollar, PCE, and GDP. Absolutely, Callie, you're absolutely welcome. Matthew Biggs, thanks for the updates. Yeah, you're welcome. Absolutely, Eli, Tuku, Ralph, good to see everybody back in the room. As always, trade the action well, and we'll talk soon. See you.